The Enron Scandal Simplified. Introduction. Enron Scandal. The Enron Corporation was recognized as a behemoth in the business world. However, after a successful run, it fell horribly and went bankrupt. The downfall and bankruptcy of the Enron Corporation shocked Wall Street and put several employees on the verge of bankruptcy. The company has a lot of debt on its books. An attempt to hide these through the use of special economic organizations and special purchase vehicles. Enron stock reached its highest market price of $90.75 on December 2, 2001. Stock prices plummeted to a record low of 26 cents per share once the accounting scam was revealed. Rise of Enron Scandal. The controversy started with Enron's activities in the video rental industry. To break into the VOD market, the company teamed up with a blockbuster. The company exaggerated the earnings base for the expansion of the VOD industry after entering the market. It spent a lot of money on broadband initiatives, but it hasn't been able to recoup the money it has spent. The company began to fall apart in the year 2000. By using the accounting concept of mark-to-market accounting, CEO Jeffrey Skilling was able to conceal any financial losses coming from the trading business and broadband initiatives. Background. Enron was founded in 1985 as a result of the combination of Houston Natural Gas Company and Internorth Inc. Fortune named the company the most creative in 1995, and it went on to have a great run for the next 6 years. Andrew Fausto became the company's CFO in 1998, and the CFO constructed SVPs to hide the company's financial difficulties. During the year 2000, Enron stock traded at a price of $90.56 per share. Initial ripples. Kenneth was replaced as Chief Executive Officer by Jeffrey Skilling on February 12, 2001. Skilling abruptly quit on August 14, 2001, and Kenneth reclaimed the position. During the same time period, the company's broadband section recorded a significant loss of $137 million, and stock prices plunged to $39.05 a share. During the month of October, the CFO's legal counsel urged auditors to delete Enron's files and only keep the material that was useful or required. The company announced a new loss of $618 million and a $1.2 billion write-off. The stock price falls to $33.84 per share. Fall of a giant. The Securities and Exchange Commission launched an investigation into the company on October 22nd. Enron stock dropped even further as a result of this news, closing at $20.75. The company admitted and revealed for the first time in November 2001 that it had exaggerated its income levels by $586 million. It's also worth noting that it's been doing so since 1997. The company declares bankruptcy on December 2, 2001, and the stock price remains unchanged at 26 cents per share. Criminal probe. On January 9, 2002, the Department of Justice filed a criminal complaint against the company. The NYSC suspended Enron on January 15, 2002, and the accounting firm, along with Arthur Andersen, was found guilty of obstruction of justice. Enron hiding their debt. The Enron Corporation and its management engaged in an unethical plan and off-balance sheet accounting malfeasance. It established a unique economic entity in order to conceal the large debt from creditors and investors. Rather than focusing on the operating results, this special purpose vehicle was used to hide accounting reality. The corporation gave the special economic vehicle a share of its assets with rising marketable worth in exchange for cash or a note. It guaranteed that the counterparty risk was reduced by using a special purpose entity. Although the formation of special purpose vehicles is not unlawful, it can be compared to debt securitization tactics and deemed to be ineffective. MTM in Enron Scandal. Enron CEO Jeffrey Skilling changed the company's accounting technique from historical cost accounting to mark-to-market accounting. The Securities and Exchange Commission gave its clearance to the accounting practice changeover in 1992. Mark-to-market accounting is a method of reporting the fair market value of liabilities and assets for a specific period of time. The mark-to-market method provides information to an institution and is considered a legal activity. Rather than taking up the actual worth, the mark-to-market is based on fair value. It caused the company to fail badly because the predicted earnings were reported as the actual earnings. Why is the Enron scandal important? In terms of learning opportunities for both new and experienced financial professionals, the Enron scandal is noteworthy. The controversy demonstrates why effective corporate governance is critical to any company's ability to continue and grow profitably. It also provides insight into how accounting policies should and should not be used. Any abuse can have disastrous consequences. Conclusion: Houston's natural gas firm and Enron Corporation merged to establish the Enron firm. It flourished quickly after the merger and was recognized as the most inventive corporation. It did, however, stoop to unethical accounting tactics. It was involved in the formation of special purpose entities, which were used to conceal the Enron Corporation's mounting debt, and this led to the failure and downfall of the business.